Hey guys, it's Tanner Manson from Future Investing, and today I want to talk to you guys about 3 amazing stocks to watch because I think they're very close to being able to see massive opportunities. Now, none of these 3 stocks that I'm going to be talking about do I own them or do I even think that I will be purchasing them at their current prices, but this video is mainly based around if something were to change in either their business model or their pricing. So, just as a disclaimer, although I am actually a licensed financial security advisor as my full-time job, none of these stocks or topics that we talk about today are in any way my recommendation. This is merely my opinion, and you can choose to do what you wish with this information. Now, if you could, hit the like button down below and subscribe if you want to see more content like this. Now, let's jump right into it. I'm itching to talk about these stocks. Now, for number 1 on our list, we are going to talk about the largest Canadian company ever in history, Shopify. Ticker symbol SHOP. Yes, that's actually a true statistic. At a $177 billion market cap and a 900 PE ratio, this is now the largest Canadian company ever in history. And yes, everyone knows Shopify, the e-commerce giant that allows small businesses to make easy websites without having to learn all this HTML and all the different scripts that you must know to create a good website, or even get connections with Visa or MasterCard to process payments. All this is easily handled for Shopify with a matter of like $30 a month they can do this. And yes, new businesses will always have massive needs like this. A business that can go in and always find small business problems and easily find the solutions will always have a great ecosystem in this economy. And although they do have competition, none of the competitors are even close to being in Shopify's space. And whenever I said ecosystem, I truly mean it. They have so many different revenue streams, it's crazy. Just to list off a few of them, you have subscriptions, app sales, theme sales, domains, payment processing fees, Shopify shipping, Shopify Capital where they have their financing program, referral fees from partners, and sales from their point of sale hardware where they're taking on Square in that space. All these different revenue streams have brought in a 47% compounded annual growth rate of reoccurring revenue for Shopify. Although I will state that that number is being very inflated from Q3 of 2020 whenever all these small business and side hustles had started emerging from the pandemic. They had a 97% increase in Q3 of 2020 from Q3 of 2019, which experts are saying that in a post-pandemic world, as we start to go back into regular life, that a lot of these side projects and side hustles start to die down. This is an amazing business and there will always be growth for Shopify, but at a 900 PE ratio, I'll wait to see a correction. For stock number 2 on our list, we have Tesla. Ticker symbol TSLA. Tesla operates through 2 major business segments. You have their automotive and then you have their energy generation and storage. Now, if you guys have seen my videos in the past, I can post it up here if you'd like to go over there, but I've been a massive fan of Tesla for many years now. It was actually the first stock that I had ever purchased. I am in no way questioning the product that Elon has made or the business that they have created. What I am questioning is how the stock market is reacting to such a business. It's very clear that the stock market doesn't want to value this company as an automotive company. They want to value it as a tech and energy business. But whenever you actually look at the energy generation and storage segment of their business, it makes up for a total of 7% of their total revenues and only 1% of their gross profits. That all includes the design, manufacturing, installation, and leasing of all their solar products. That number also includes their massive energy storages that they have in Australia and China as well. So yes, in theory, it is an amazing idea that they are going to have tons of solar generation and storage for the entire world. But on paper, it's not a profitable business so far. The majority of the business comes from selling EV credits, which is quickly declining, as well as selling the cars for which I would just value it as a regular car company, which would take the price down by 90%. All that being said, I think this is the best car company in the entire world. They have the best products on the market with a 7-year lead in my opinion. And I would pay a premium like that for such a premium car company. But in no way does that price in an $800 billion market cap. That would price in for them to sell every car in the entire world, and even then it would still be a premium for me to pay that type of price. 20 years from now, I think Tesla will become a $1 trillion company. Currently, I don't think it's anywhere even close. Right now, it's being placed higher than Facebook, and I mean, you're talking about Facebook, a money printing machine, one of the fastest growing tech companies in all of history. Right now, I think Shopify has a better chance of making more revenue than Tesla, and yet it's not even close in terms of market cap. With all that being said, if the price changes in the business, I'll be the first one in line to pick up some shares. And number 3 on this list is an extremely exciting business, Sea Limited, ticker symbol SE. This is a Southeast Asian tech company very similar to the other two businesses where they're creating such an ecosystem. The first segment would be their gaming platform, Garena. This business is very similar to a platform like Steam, where they partner with massive creators like Tencent to get Garena a massive library of games without them having to create their own. And just a disclaimer, Tencent's actually the largest holder of Sea Limited, where they actually have some of their members on the board of directors. So not only do they have their money, but they also have their expertise and their ability to know how to grow the way Tencent did. But now they're actually starting to develop their own games, like Garena's Free Fire. Free Fire is the most popular mobile game in Asia, where Sea's quarterly active users hit 572 million players. That's up 78% since the last year, with quarterly paying users up to 65 million. That's up 128% year over year, which in my opinion is the most impressive stat of all of this, is that although they are turning out more users, more of those users on top of it are paying for their service, which shows the highest satisfaction of all because people vote with their dollars. Now, Sea Limited doesn't just deal with gaming. For their second segment, you have Shopee. Shopee is the top-ranked, most downloaded app in Southeast Asia and Taiwan. They saw gross orders go up 131% in Q3 of 2020, with gross merchandise value growing as much as 2 times, up to $9.3 billion. And this isn't even their entire business. In segment 3, to put it all together as one big conglomerate, you have Sea Money, their digital financial services that is growing at massive scale. This is where we saw in Q3 of 2020 a total of $2.1 billion in mobile wallet total payment volume, with 17.8 million quarterly paying users for their mobile wallet services. And just to tie it all in, the most amount of money being used for Sea Money is going to Garena and Shopee, with 30% of all the money that was transacted in Shopee being used through Sea Money. Tie this all together and you have the largest company in Singapore. You have Garena taking on Tencent with their gaming, Shopee taking on Alibaba with the shopping, and Sea Money taking on Ant Group and trying to take over the financial services business. This is exactly the type of company that I like to talk about. One that takes over in multiple industries and has massive mentors helping them with their every move. But once again, we still have a dilemma. This company is making less and less profits each quarter, and yet people are pricing them higher and higher because of the user base. And I agree that those are strong signs, but also, what premium are you willing to pay for that? I mean, Alibaba is another strong company that is growing like crazy, and yet the premium isn't even close to the level that Sea Limited is. The way these three companies are priced right now is if their most optimistic goals and aspirations are going to be hit 100% of the time, which is a little crazy because stocks always have major obstacles to go through. It's what makes the stock market do the 2-step forward, 1 step back, 2-step forwards, 1 step back sort of approach. If and when any of these stocks hit any sort of adversity, I'll be right there in line to see if I can get in a good buying price for these companies. I am not worried about losing out on the possibility of this stock growing in the short term. I want very strong companies that I can hold for the next 10 years and be comfortable knowing that I won't lose my shirt if something terrible was to happen. It's buy low, sell high, not the other way around. For example, you saw an amazing buying opportunity with a company like Nvidia. In 2018, whenever Bitcoin collapsed, you had an amazing company go on a crazy discount, even though business wasn't even that flawed. The price of the stock went from $280 to $130. And you know, whenever that happened, I was a major buyer during that time. During that time, it became the largest stock that I was holding. I was not worried at the time whenever the company was at $260 or $250, $270, that I was going to miss out on a great opportunity. A lot of stocks go up. I'm not worried about catching every single one of them. But whenever that company went on a discount, I knew I was in a very safe position to take that call. And now look where the stock is, going from $140 up to $570, even $600. And yes, sure. I mean, in the long run at $280, you might have still been fine holding it throughout the entire way. But if adversity had came, your pricing difference would be immaculate. With Nvidia, for example, you could pick up twice as many shares at half the price. So whenever it does go to 600, instead of you just doubling your money from 280, you're actually 4 timesing your money from 140. But also you were able to buy twice as many shares. So you're actually getting like 8 or 16 times what you were able to put into it after the dip. And this is the importance of getting your stocks at the right prices. I love all these businesses. I don't care if Shopify or Tesla goes to $1,000 a share. I'm only going to get in if I get in at a great price. I hope you guys see where I'm coming from at least. If you're holding these companies from a long time ago, I mean, great. I absolutely love it. Shopify, Tesla, they'll all be around for a very long time. Anyways, guys, comment down below what you guys think about my 3 stocks. Tell me if there's any stocks that I should be keeping an eye on, maybe something that you guys have been watching. And if you guys could, like the video and subscribe down below if you want to see more content like this. But until next time, I'm really trying to get these videos out. I mean, like I said, I'm just trying to find times to record. But until next time, stay safe trading, and I'll see you guys next time. Bye.